Good morning, everybody. Thank you for the introduction. I recently just quit my job of 18 years with England Enterprise. For some of the real estate agent in this floor here, I have dealt with some of you all as my client or my associate for many, many years. So under England's portfolio, we run Bangsa Village 1 and 2. So I have been out on my own since 2 months ago, and I will take you through some of what my observation of the retail trend is. I'm also the secretary for the Shopping Center Association. So in this business, it's a business of understanding changes. What is the latest trend, what's the latest fashion, etc., and things like that. A lot of people think it's a textbook business, but it is not. It's far from it. Because when you own or you run a mall or you plan or you strategize for a mall, you deal with actually essentially 3 different people. You deal with the developer who has their own agenda. All of us here deal with developer or owner with their own agenda. You deal with the tenants, which is businessman. The tenants, your retailer in your mall, essentially is very savvy businessman. So, but they are also your paymaster. But if your tenant itself succeed in your mall, right, your ultimate paymaster is your customers. The consumer, the people who come in this mall. So you deal with multiple facade, multiple level of complexity. So I'll aim to have a lot of what I call slides to take it as easy as possible. And I will quickly open the floor for question and answers. Okay? Thank you. So my topic basically essentially is industry trend and insight of retail sector. So what I wanted to explain about is the supply and demand. Put it in numbers so that everybody knows there's an oversupply. Impending oversupply, but there's still techniques and strategy to work around that, okay? And then the second main topic, what are the trends now? I mean, aside from the supply, what is the trend? And what can we get out of it? What is next, you know? When you know the trend, based on market practice and your own experience, what can we expect in the future? So first, supply and demand. So this is based on Shopping Center Association survey. We done a survey in 2014-15. So it's very clear definition. We define shopping mall as conventional, enclosed mall, hypermarket, retail podium, standalone supermarket, and street malls, wholesale mall. Your shop is not considered a shopping mall, etc. So actually we have about 500 over shopping centers in Malaysia. And the gross floor area is about 240 million. And then the total net leasable is about 136 million. So efficiency, we're talking about of a building is about 57–60%. So I'll talk about it later. Efficiency has got to do with comfort, accessibility, etc. But this is the big statistics. Actually, last year, towards the tail end, occupancy is still 92%, but as I talk to market leaders and etc., I think the numbers are trending close to 89%, etc. There are a lot of closure of retail and tenants pull out immediately after Chinese New Year. So a lot of the malls have persuaded the retailer to continue until after Chinese New Year traditionally. And after that, we expect a bit of a slowdown in retail consumer activity. So As you can see, this is a very big industry, $100 billion industry, employs 36,000 people. And if you break it down, essentially, when we categorize super regional mall, means mall that is above 1 million square feet, and what it means, it trades beyond half an hour. You would drive to the mall because the mall has something so unique and it has a certain size. Why would we do that? Basically, if it has an ice skating or Olympic ice skating ring, you go there. If it has 15 screens and one big IMAX and you want to have a different movie viewing experience, you go there. So regional malls, a little bit smaller, and neighborhood malls, which consists of the bulk of the area, is 47.9%. Others is various genre of malls and category of it. So this is a broad picture. When I say supply, there is a different part of Malaysia that has got different supply and demand. So we commissioned Stratos to help us to do a bit of study on the supply. If you look at the up in the board, the average per capita square feet is 13. But if you look closer, Kuala Lumpur ranks above average, 25.8 square feet per capita. There are actually 3 or 4 regions that has that. Basically, Malacca, Penang, Johor, and Perak is more than 13.3 average. Let me just move. So where do we compare to the average? Kuala Lumpur 25.8 and Malaysia is 13.3 average. So if you look at comparative world, suddenly the numbers, I mean, of course in KL is way higher, but in other parts of the world like US and Australia, we're still comparable, okay? I'll discuss a little bit further. If you have questions, I'll discuss a bit further about these statistics. But I just want you to give a relative feel about it. A lot of people feel that we are oversupply. It's simply because if you're based in Kuala Lumpur, you actually literally can see the projects coming on stream. But certain region, some of the outskirts mall and some of the different states in Kuantan, etc., and recently a big mall opened in Kedah, their occupancy rate is actually very good, you know. So after we cover supply and demand, so when there is a so-called visible impending supply coming on stream, what are we seeing now? The market trends. So big malls will continue to get bigger. Mixed development will have more components, and we are seeing that. Successful mall will still command rent increases and continue to be congested. Can you believe it? You know? So there will be a very big divide now. Success breeds success. Reason is retailers inside the mall, as a businessman, will choose to come into a mall that they view that their likelihood of succeeding in your mall is very much higher than a mall that is on the way out. So when you negotiate even at a higher rental, it's a question of business decision. So this is a game of where if you are a mall owner, you can afford to make very little mistake when you put a $100 million investment in the mall. So the bigger malls, what we're seeing now is certain retailer will only choose bigger malls because they command a certain size and a certain catchment. So either you go that very big, or you go very niche, neighborhood or niche. And that niche must be, the trade value of that niche must be substantial before you build something like that. So here's something interesting. Do you know, actually Malaysia have 3 of the world largest mall in the top 10? We literally do have. I know it's hard to believe, but you know, here's the ranking. One Utama. Actually, it's 5 million gross built up. If you walk one wing the whole day and you put time into walking, actually you can't finish in a few hours. And then you go to the other new wing, it's also equally as big with their own cinema. So both wings has their cinema. So Mid Valley as well. And Mid Valley added with gardens is incredibly complete shopping experience, right? Sunway as well. And Sunway is still adding additional new wing in their phase 3, phase 4, you know, etc. Actually, we literally have the top 3, right? I've been to the biggest in the 80s, the 90s, used to be Edmonton. I haven't been there, but I've been to the most current biggest mall in the world, which is in China, right? The sophistication of that retail mall is not anywhere close to our sophistication in terms of the fit out, the brand mix, the design, the flow, the circulation. They just have the size. But in the top tier China city, their sophistication and their mall retail mix is at par, if not above us. But guess what? We having even bigger mall coming in. So the impending one on the pipeline, Empire City. If any of you are familiar with it, it's coming. It's from the same developer that developed Empire Shopping Gallery in Subang. So this one is 5 minutes throw from the curve. Maybe 7-8 minutes stone's throw from One Utama, Ikano, etc. This one is due to complete and launch maybe 3rd quarter this year. So that's their projected. Sorry. So, but as we speak, we have size. Why does size matter? Size matter because you could put a lot of what I call big format retail now. There is a lot of big format retail by international brands coming into Malaysia. Some of them are not your traditional mom and pop that needs 1,005 square feet. They need 20,000. H&M, Zara, you know, Home Pro, Sports Direct. All these are global brands that need bigger space. You know, so if your mall don't cater to that size, then your chance of having them at all isn't there at all. But when you have also size, you have multiple components. They are also your anchor. Hotels, you know, like this component, they have 3 hotels on top. They have Olympic skating ring, etc., etc. So the second trend and insight I've been seeing is actually, despite the rapid urbanization, there is and still is a big demand for quality retail space. We're going to go through a few projects coming on stream, but with the top tier expert team, they are actually doing a good job. These are in the market insights. TRX. TRX is the Tun Razak Exchange. It's very big land in the city center. So you're going to have the MRT there. And it's touted as the new financial zone of Kuala Lumpur. The retail is actually is a JV project between Lendlease. And Lendlease is one of the top Australian or if not international company that, in my opinion, Lendlease and Westfield is the top retail planner, retail executioner in the world. So they are heading this. The preliminary anchor, the discussion with the market, I think the planning, or the success factor for a mall is there, and interest with this shopping TRX at the bottom is very high. Okay. The other one is EcoWorld, the old Pudu Jail. Also, the developer have employed a world-class architect planning for this mall. Also with direct, all these city center malls are linked with MRT and LRT. So all these have got significant proximity access to that mall, right? So this one also by 2 lines. One is MRT, one is LRT, one is monorail. This is taken by Mitsui. The group that is a Japanese group that have proven success in executing Mitsui KLIA, you know, the outlet mall in Mitsui KLIA. So they're taking a bigger one. So they are working with EcoWorld. Bandar Malaysia, again, everyone has heard of this. So recently the China group have taken, I think, 40% of equity in this Bandar Malaysia. And from the report, although it's very early, high-speed train needs a very long runway. So the station is way bigger than normal MRT station. So apparently they are in the planning stage of building an underground retail component. So this will be quite exciting as well. So it could be a China group or a Japanese group, you know, depending who gets the high-speed train. So this is the trend I'm seeing in Kuala Lumpur. Am I expecting no interest in all this development? The two that is in the pipeline, advanced development stage and planning stage, which is Mitsui, EcoWorld, and the one in TRX. Actually, I look at the team, I look at the interest in that international anchor in that one. I think they are on track to deliver a world-class project. On track to deliver a world-class project. Okay, similarly, when on the opposite side of the equation, right, what we see is less successful mall will experience faster change and demise. This is just a reality. When you know, what I'm seeing now in the trend is actually retailers that have 20 stores and 30 stores. The moment their 2 stores are not making money, they are not even bothered to just... These are stores in the mall that they have fitted out, you know. If it's a 1,000 square feet retail space, they spend 500,000, it's fitted out. If that numbers are not meeting, they're not even going to struggle and continue with it. Surprisingly, they just decide to close. So the decision for this closure is so quick now. And I asked some of these retailers why. They say, you know, I'd rather spend my time more focused and consolidating. I don't see an improvement in the business condition for this year. So why would I want to support a number, this store, for the next 12 months when I don't see it? So the decision is very swift. So can you imagine you run in a mall where your retailers are not making money? The closure is very quick. So what I've seen in the past, not now, the past, is the change of mall usage is very quick as well now. So I'll show you example. Some of you may be aware of this, you know, like UE3, you know, I don't know whether you still remember UE3, you know, not too bad location next to a very busy road. Look, you change to Viva. You know, the owner has spent considerable amount changing to Viva. You know, Central Market, you know, in the old days, it's a real wet market, change of use to now attract, you know, on the left is the old wet market, and then now is the to attract tourists. So all this are what is happening. Cap Square, and then into Intermark, right? Inside is beautiful. By the way, the few examples I've shown, the changes like Sungai Wang, from the old days into the new. All these examples of total refurbishment, etc. Some of these are undertaken by, which I'll cover later. Traditionally, the mall is owned by entrepreneur, contractor, developers. Eventually, some of these change of use is owned by institution. Some of these are owned by Capital Mall now. Some owned by significant funds. So with a different management inside, they come with expert advice and they change the use, for better or worse. Okay. The fifth trend, intense competition. We'll see more focus on specialized mall and more reinventing and regenerating themselves. Okay. Now, intense competition also have led to what I call specialized mall. What we're seeing is a proliferation, okay, I can't pronounce, too early in the morning, sorry, of outlet malls. How many of you have been to an outlet mall? I just want to see how many of you have been to an outlet mall. How many of you have been to an outlet mall overseas in America? Okay, if you have been there, right, actually, do you realize that the JPO, Johor Premium Outlet Mall, is very similar to some of the outlet mall design in America? They are open, outdoor, etc., and standalone, and away from city centers. That's because some of them are actually planned and executed by them entirely. So they are world class, and they sell existing real brands at significantly lower price. They sell overruns, and they sell off-season brands. JPO, Famosa is the latest that's just opened in Malacca. I think 80% occupy is actually, in this soft market, to have 80 to 90% occupy is actually very good. It's very beautiful. Also executed by international group. Look at some of the brands they have, like Cotton On, Sakor Brothers. These are these are international brands, So Johor Premium Outlet is so successful that now they have to build a second phase to house even more brands. It's in the middle of Johor, between Singapore and Genting Highland. It's owned by Genting Group of Malaysia. So they have quite a few luxury brands as well. If you see Canali, etc. So it's an open format where the cost of running is cheap. You don't need to aircon. The entire thing is open air. The land is cheaper. So they pass the cost of savings through to the consumer. Some of the brands also very significant. If I go to, it's too small, the directory. It involves Nike, Acne, Coach, Furla, Guy Larouche. These are good brands, So these are what is working right now. When the economic climate is tough, people don't mind driving a bit further to get a bit of savings. So like in Malaysia, everything that is successful quickly gets built, Now Mitsui, a stone's throw from KLIA, also been running for the past year. Also has got good brands. Bailey is there, quite a few others, Nike, Sakor Brothers, etc. Genting Premium Outlet, because the success of, this is not here yet, because success of Johor Premium Outlet, Genting is building one. So it's up in the hill. If you are familiar with this, it's up in the hill. This is what it will look like when it's completed. So anticipate a large tourist visitation as well. KLIO, another outlet, 10 minutes away from Mitsui, 15 minutes away from KLIA airport. So also along the horizon. This is what it looks like internally. Also open air so that you can save the energy cost. Design village in close to the second link of Penang Island near Batu on the mainland. So there's a lot of activity happening there. So this is also in the pipeline. This is what it looks like. So if you are familiar with the second link, this is where it is. So there's a lot of activity there. IKEA has been touted to go there as well, confirm, etc., etc. IKEA will open one in the north, one in the south in Johor, and one more, which has opened in Cochrane, in KL, Kuala Lumpur. Suburban Mall is the gem now. What we're seeing, Suburban Mall grows, and well planned and managed will do well, and they are doing well. I will go through very quickly because there's so many of them. This one I'm quite intimately involved in. Is trading very well. Bansar Village 1 and 2. Mount Kiara. Deep House in Cyberjaya. I was involved in this project. 10 minutes. Okay, I'll be very quick. I was involved in this project 4 years ago. What happened is actually to persuade a retailer to open in Cyberjaya, nobody believed because there's no residential, etc. and things like that. But that is an underserved neighborhood. As we speak now, when you deal a lot with developers, actually there's a lot of still underserved neighborhood. And if you do a suburban mall small enough to cater for that, actually the mall actually trades very well. So what we found is this suburb, nobody has any entertainment component. Everybody drives there to work and they drive back. But there's a lot of college. Lim Kok Wing is there, Multimedia University is there, and there are a whole 200 enterprise, IBM, Shell, Fujitsu, Dell, Hewlett Packard, you name it. But where do they go? They go all over the place. But if you build something small and cater specifically to the neighborhood, it will trade well, and it has traded well. So it's 1.5 years now, it's 95, heading towards 98% occupancy. Again, it's you have to plan it well, no? Gamuda Walk. So what we're seeing now is actually the suburban mall is getting smaller and getting closer to the neighborhood. So all of it is anchored by either supermarket or the essential that your daily needs. Publica as well, anchored by Ben. On one end is like big supermarket, the other end food court. It's familiar, right? Some of these brands. Like now, this one, Jalan Patai, Damansara Heights. So they are much smaller format, they are getting closer to the neighborhood. Sunway Giza, Wangsa Walk. These are not new projects, these are in your neighborhood. And quietly, their rental and their yield is actually very, very high. They serve a different market from city center. City center has got a business commercial. They do a lot of tourists. They do a lot of what I call daily office worker transaction. But neighborhood, they do the mom and pops, they do the services, they do the daily grocery shopping, etc. So quickly, I go through. Star Avenue. Number 7, ownership of mall will continue to transfer from developer, contractor, entrepreneur to institution. Some of this is like Song Ai Wang I mentioned. Pyramid. Sunway Pyramid also in REIT. Pavilion also in REIT. Mid Valley also in REIT. In case you don't know, I just want to mention, because as institution buy, is the favorite purchase for them because their rental yield is very reliable and very consistent. Global super brand continues to expand. This is something I want to just spend a bit time on. Global super brand continue to expand. Category killer, superstore, etc., etc. These are category killer, literally, you know. Oh, sorry. No, it's the wrong slide. Oh, it's the wrong slide as well too, sorry. There was David Beckham in H&M underwear. Right? Is it David Beckham? Yes, he is, yeah. H&M is a category killer. Why? They command your entrance, the biggest space, traditionally paying the highest rent, but they can command you to pay fit out. They can also ask for lower rental. So what we're seeing is global brand like this coming into Malaysia and growing alarmingly, you know. So, and they are muscling some of the less efficient retailer in the market. Nothing wrong, but this is the trend we're seeing, right? There's something to note. Why I say they are killer. They are literally, in the category, they take a lot of market share from other people. So, IKEA, they're very category focused, you know. Uniqlo, these are big format, very successful. Okay, technology. Technology will be the alternative channel for sales and distribution for retailer. Actually, for those above 40 or 50, some of us may be less tech savvy, but if we have a mobile phone that is a smart one, we can get online very easily now. So what I'm seeing is actually a growth in there, right? So online shopping, traditionally you have to get to a computer, but now you can do it even in your mobile phone. How many of you have heard of Lazada, 11th Street, Zalora? I don't have time, so I'm moving very quickly. Net-a-Porter, etc., etc. These are new startup where investors, they raise literally $300 million to fund their expansion into online. You know, their web page is world class. And what's scary about this market is actually they're getting traction from principal. Let's say if I'm owner of a brand, Gucci, Chanel, etc. They are getting supplies from them now, some of these, you know. Like now the line is blurred. Zalora have pop-up stores as well. From online now they also have retail. Net-a-Porter is actually a very big now online sales, but they also getting all the brands. Almost like 90% of all the major brands is supporting them by allowing their merchandise to be traded there. Famous designers, Stella McCartney, etc., and all the brands are there. You know, example in Net-a-Porter. Malaysia, we are having like 50,000 square feet of parallel importer. When you parallel import traditionally, this one is in one of the malls just opened. 50,000 square feet of retail space. And the experience, the fit out is world class, you know. So who says parallel importer cannot do a good retail experience? Inside it looks like that. We are having what I call even parallel importer into good malls. These have actual store. Last time they sell online, but they are now having retail stores in good malls. In Avenue K, they are in Sunway, and the outlet is beautiful. So what is happening? A quick run through before I end. This was 2014. I just want to share with you. 2014, we are in 2016. The title says higher traffic in malls, but sales decline. And these are all the big boys of retail. But I want to show you an example of newspaper cutting 2016, just last week. Onslaught of shopping center. From these two slides, I go back again. Higher traffic in malls means higher customer walking, but sales decline. Then just last month, onslaught of shopping center means supply, you know. So this is generally the general consensus. So where do we go from here? One outlet too many, you know, all the outlet malls, just last week in the Edge. And here we are releasing more land in Kuala Lumpur. Kampung Baru is about to release more land with City Hall help. And we have hike in alcohol taxes, means entertainment will be subdued even, or either entertainment subdued or a bigger smuggling market, you know. In the same page, very simple. House buying, a new way of refinancing the house. But at the same time, at the bottom, Malaysia had the most debt in Asia, consumer. So consumer spending will be depressed. So another one. So what does it take to be a successful mall? The right tenant mix, guys. Everybody know we need right tenant mix, but how do we get that? The right center management. You have to start correctly. And the center management have to sometimes persuade, scold, or threaten the bosses to understand retail, because bosses are driven short term. Retail shopping center is long term, okay? Because they are developers, they are short term, they build, they sell, they make millions. The mall doesn't work that way. You have to nurture them. Design, get it right the first time. Get your accessibility right the first time, guys. You know, very costly to change. And plan. Location, and the ownership that understand retail mall. Very quick one. So moving ahead, the mall may find it difficult to lease spaces now. Retailer will have more choice. So it's the retailer's market. Mall construction will continue to outpace retailers' demand. Depressed general consumer market continue, but F&B still the operator still operates. Last one, I know he's chasing me. Online will grow, but not expected to affect traditional shopping for now. Online purchase in comparison to our traditional consumption is less than 1.5%. So in China, it's a lot bigger. China, I think now, is spearheading the online onslaught. But for now, online is still not making money, okay? Again, my view, properly planned suburban mall will do better. Thank you very much, everybody. Open to that.